Hey everyone, welcome to my channel. I'm Doris. I'm here to show you about my stock account and today's market update. Today, the Nasdaq of my account has rose to $67,000. Today, Apple has closed up marginally. SQQ closed up 1.26%, SPY closed up 0.09%, and United Natural Gas closed up 12.53%. As I have expected before, that the index for the international crude oil has dropped to its historical lows, and then I'm currently expecting a continued return to nothing to its highest point, but also to just rebound from the historical low. Let's take a look at the market today. Dow Jones Industrial Average closed up 0.13%. Nasdaq closed down 0.32%, and S&P 500 closed up 0.13%. Today, the industries that generally closed down were software infrastructure, semiconductors, and these all were affected by the negative income earnings report that has been released recently. And today, Nasdaq closed down for a third straight day. Fed minutes showed officials were cautious about cutting interest rates too quickly, not before inflation actually fell. The market continued to watch U.S. earnings as Nvidia's report after their close on Wednesday was disappointing. Currently, the policymakers are worried the risk of an early rate cut rather than waiting too long, the minutes said, while officials said the upward risk to inflation had weakened, but inflation remained above the Fed's target, with some officials worried that the containment process could stall. And some quotes showed that most participants were aware of the risk of easing their policy stance too quickly. Only two officials pointed to the risk of maintaining an excessive restrictive position for too long. Participants also noted a range of two-way risk to inflation and economic activity. Banking risks were thought to be much lower than during the regional banking turmoil last spring, although some companies had vulnerabilities worth monitoring. Fed minutes expect financial and credit tightening to continue to affect the economic output this year and next. The economic forecast prepared by Fed staff for the January meeting was slightly stronger than the December forecast, as the upcoming data suggests an upward correction to the 2023 GDP growth, boosted output levels across the forecast period. The projected path for the unemployment rate has been revised slightly downward, reflecting an upward correction in output levels. Both overall PCE and core PCE are expected to decline in 2024, and the overall PCE is expected to be close to 2% by 2026. Shares of SolarEdge Technologies, an Israeli photovoltaic inverter supplier, plunged as guidance provided weak first quarter results. And Nvidia's earnings and outlook are critical to the stock market sentiment right now in the coming weeks, as AI-related stocks have been a strong driver of stock market returns. Sentiments have been worsened about people's growing concern about the Nvidia's skyrocketing valuation. The stock has plunged about nearly 225% over the past year. In addition, the company's product competition pressure is also increasing. Northend Private Wealth Chief Investment Officer Alex McGrath said the entire tech industry is now overvalued. He believes the Tuesday sell-off in Nvidia and other big tech stocks could mean investors are embracing the bigger fall theory, meaning that the overvalued assets continue to rise because investors are willing to pay higher prices until no higher bids. He said, throughout the stock market rally, people rushed to pay higher prices for tech stocks. This was supposed to be a core asset allocation, but as you hold longer, the biggest question is, when do you start reducing your holdings? From the performance of the Nvidia stock, I think all you can see is underaction. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.